Hello everyone, welcome back to our Accounting 210. In this video, we will start talking about Chapter 6, Cost Behavior. So from the title, you can say the focus is we want to see how the cost behaves, right? Good news is from this chapter on, I think we finally will not talk about manufacturing overhead allocation. I would say at least that's not our focus from this chapter. But bad thing is, I don't want to say bad thing, but the new thing from this chapter, chapter 6 and chapter 7, we will focus on a new format of the income statement. So when you first learn this chapter, you may feel a little bit not comfortable, but hopefully after chapter 7, you will feel better and better. Okay, so now let's get started. Learning objectives, we have 6 things to practice to be ready to prepare for your exam. I would say this chapter is a little bit a long chapter, and then you have some parts you need to do the calculation, and it's related with your high school, the statistics, regression. I'm not sure whether you still remember those things, y equals to ax plus b. If your answer is yes, I remember that and I'm good at that, then congratulations, you will feel easier to learn this chapter. If you say, I don't remember anything about y equals to ax plus b, then my first suggestion is you may want to go back to your high school, notes, and then get the notes, get some basic concept of the regression, statistics, those parts. Okay, so that's kind of my suggestion here. The first thing talking about key characteristics and graph of various cost behaviors. When you see this terminology, it basically tells you how costs change as volume changes. Okay, so the cost is not human being, they cannot really behave like us, but they do change, the cost change when the volume changes. Okay, so that's our focus, how cost change as volume changes. We have 3 common cost behaviors, variable cost, fixed cost, and then if you mix those 2 together, it will be called a mixed cost. We touched this a little bit in chapter 2. I don't remember, still remember that's the last part of chapter 2. So kind of at that moment you had some general idea, and this chapter we will put more details there. Variable cost. Okay, so now we focus on variable cost. Why it's called variable cost? Because the total cost, because your total variable cost change when your volume changes. That's the reason we call it variable. It varies with the volume. So it varies with the volume. If your volume goes up, then the total cost will go up. If the volume goes down, then it will go down. So it focuses on the total variable cost, right? So it focuses on total. But if you say every unit, if we just say for each unit, then it will be constant. Okay, so it will be the same. So for each unit, it's the same. But for total variable cost, it changes with the volume change. I think I'll give you a very just easy example is, let's say, the gas, right? So for the total gas, if it's total, then the more miles you drive, the more gas you have to put, right? So the more miles you drive, the more gas you have to put. But for each unit, for the first unit you put is $2 per gallon, second unit is still $2 per gallon, third unit is still $2 per gallon. For each unit, it's the same. So when you do the exam, when you do your practice, make sure you read the keyword is total or for each unit. Graph always begin at the origin, so we always start with 0, which means if the volume is 0, if you don't drive at all, your gas will be 0, okay? Slope represents the variable cost per unit of activity. You see the word slope, right? So this is kind of like a high school statistics. The function is y, I put a number, okay, equals 2 times x. So that is our gas, the total cost of our gas related with the miles. Okay, so this is the mile, and then this is our total gas. How do I interpret that? When I drive 0 mile, my gas will be 0. That's it started at the origin. And if I drive 1 mile, my gas cost will be $2. I drive 2 miles, cost of gas will be $4. So the slope is the variable cost per unit of activity. For each mile, the gas cost is $2. So the $2 is the slope, is the variable cost per unit of activity. Okay, so let's look at your textbook. How does this tell you? You can see the slope. What's the meaning of slope, right? Slope is this line. The slope is this line, and then is this part, right? This is the slope. So this slope, total variable cost equals to $3 per guest. So if you have a 0 guest, so this equation will be y equals to 3 times x. So when you have a 0 guest, if you read the textbook, I think it's a hotel example or something like that. So if you don't have any guest, then your cost of the hotel will be 0. If you have 1 guest, cost will be 3, 2 guests will be 6, 3 guests will be 9. So 1 more guest, you will have $3 as the variable cost. For this one, breakfast and refreshment, our variable cost. So the equation will be y equals to 10 times x, right? So kind of like the breakfast and the refreshment is $10. If there is no people eating breakfast, the cost will be 0. But 1 more person, the cost is $10. So this is the slope. This is called as the slope. For variable cost, the equation is here, y equals variable cost times the x. So we want to use cost equation to express and then predict the cost. Hopefully you still remember those things. As I say, I didn't take my high school courses here, so I'm not sure you learned this in high school or first year college or second year college, but I assume you still remember this thing. Y equals variable cost times the x, okay? So the y is your total variable cost. The variable, the V is variable cost per unit, variable cost per unit. And then the x is the volume of the activity. Remember, if we use this example, I'll just use the first one as the example. Y equals to 3 times x. So let's say if I use that one as the example, okay, sorry. So if I use that one as the example, y equals 3 times x. So y is my total cost. 3 is the V, is the slope. So that means for 1 more guest, my cost will increase by $3. This is per unit of activity. For each 1 guest, the cost is $3. And X is the volume of the activity, is how many guests I will have be. We use this one to make a prediction. You will say, hey, what's the meaning? So let me ask you, if this is the equation, and I want to say how much our total cost will be if we will have 10 guests. Okay, so if we have 10, then your volume activity, the X, will be replaced. It's not X now. You know it will be 10 people. So this will be 10, and our total predicted cost will be $30. This is how we use our equation to make predictions. Variable cost per unit remain constant. So for the first person is $3. For the second guest, it's also $3. But total cost increases. When we have 10 people, it will be $30. If we just have 5 then it will be 15, right? But for each one, it's a constant. I hope you don't feel too bored if you already know this thing. So we will apply this to our accounting and business the practice. Key characteristics of variable cost. I don't want to repeat, but I think it's definitely very, very important. So make sure you read this slide and then read your textbook. This is definitely a good summary of the variable cost. For each one, it's a constant. For total, it increases. And then slope is the variable cost for each unit. Y is the total cost. V is the variable cost per unit. And then X is the volume of the activity. Okay, so once we finish the variable cost, the second part will be fixed cost, right? So from the name, you can kind of have good some guess, oh, it's fixed. But what's the meaning of fixed? Fixed is in terms of the total cost, in terms of the total cost. So I use an example. I said your car insurance, right? I said your car insurance, no matter you drive 1 mile or 2 miles or 10 miles in 1 month, let's say every month is $50. So no matter how many miles you drive, in that month, it will be 50. So no matter you drive 1 mile, 2 miles, 3 miles, it's still $50, right? So it's still $50. So this is, we say, is fixed in terms of the total cost, in terms of the total cost. But for each unit, it will decrease. You see, what's the meaning? Remember, we said for per month, your insurance cost is $50. If you drive 1 mile, then for each unit, for that 1 mile, your allocated insurance is $50. If you drive 2 miles, then each one mile will be $25. If you drive 5 miles, each one will be $10. If you drive 50 miles, each mile will be $1. So for each unit, the more miles you drive, the allocated fixed cost, each unit will decrease. So let's look at some characteristics the textbook give us. You want to first know the equation is y equals to f is the fixed cost. We said per unit, right, will be decreased when the volume increase because the logic is straightforward. Let's just use the insurance as the example. So I said every month is 50 and then put the miles here, right? So your numerator is fixed. Your numerator is the total is fixed. Your denominator, if you drive more, then the average will be lower, right? So that's the reason the per unit is inversely proportionate to the volume. Key characteristics of the fixed cost, I don't want to repeat it. Your English is better than me. Do me a favor, read your textbook and then read this slide very good by yourself. Make sure you know y equals to f. Fixed is in terms of the total cost. For each unit, for per unit, it will decrease when the volume increases. Last thing, I cover the mixed cost, and then we are done for this video. Mixed cost, from the name, you can know it's just a mix. There is nothing really fancy. So you put the variable cost and then the fixed cost. You know, in the reality, you need the gas. You also need the insurance, right? It's not just one part. So our total cost for our car will be y equals to Vx plus F. You will see what's the meaning. Remember, if I still use my gas, so this will be the gas is $2 per gallon or per mile, and then plus my fixed cost of the insurance is 50. So let's say for that specific month, I didn't drive anything. So if my X is 0, so that will be 2 times 0, but I still need to pay my insurance, right? So even the month I didn't drive anything, my total cost will be 50. But if I drive 1 mile, it will be 2 times 1 mile plus my fixed cost. So that will be $52. So my total cost is a mix of this variable cost and also the fixed cost. If you read your textbook example, they use the hotel. They say, hey, for the hotel, you have two parts. One, for the utility, you have two parts. One is for each guest, right? So if you have more guests, the cost will be higher. This is the variable cost. But you also have the common area. Even you don't have any guests coming, you still need to, you don't want to have the hotel completely dark. Even nobody comes in, you still have some common area. You have to put light. That will be your fixed cost. So this is the minimum amount required. Okay. So if this is the case, when we do mixed cost, it increases with volume, as I say. If you have more miles, your total mixed cost will still go up, but it doesn't start as the origin. Why? It will start at $50 for us, because even you don't drive, right? Here, even you don't drive, you still have to pay $50 as the fixed cost. So this intercept will be our fixed cost, and this slope will be our variable cost is $2. So this line equals to that y equals to 2x plus our 50. So we start at 50, and for each one more unit increases, we will increase by $2 of the slope. As you can see from here, if you read your textbook as the example, they start as 8,000. So even nobody comes into the hotel, you still have to pay 8,000 as the fixed common area, the utility. If you have any more guests coming, for each guest, the variable cost is $8. So let's say if I give you this graph, you should be able to write the regression model, right? So in this case, y equals 8 times x plus our 8,000. So this is our variable cost. You said, where did you get the number? It's just here, right? $8 for per guest. You said, why did you get a fixed cost? The graph tells you is the fixed cost is 8,000. And why we need this? Because first, you know how to interpret is if there is nobody comes in, if x is 0, you still have to pay 8,000 as the fixed cost. If you have one more guest, it will increase by $8, right? So if you have one guest, it will be 8 times 1 plus your 8,000, right? So how do we use it is we can make a prediction. I ask you, what is the total cost will be if we predict in the summer, maybe we will have 100 students coming to our hotel. So let's make an assumption. We say, hey, what the total cost will be if we have 100 students coming to our hotel, then you can do the prediction. You don't need to wait until all the 100 students come in. You can make a prediction now. So your total mixed cost will be 8 times 100 and then plus your 8,000. So it will be 800 plus 8,000. It will be 8,800. So that will be your predicted total cost when you have 100 students coming to your hotel. This is how we use our model to make the prediction. So here is the equation y equals vx plus f, fixed cost, variable cost, and then this is your volume. This is your volume. I think last thing is key characteristics of mixed cost. As always, I leave this to let you read by yourself. So make sure you know how do you interpret it, and then how do you use it to make a prediction. How do you use it to make prediction? The next part, last part is the relevant range. So when we say about the fixed cost, when we talk about fixed cost, it only fixed in certain range, right? So it only fixed in certain range. let's think about your real life. I said that the insurance is $50 per month. That's just, I would make just, I'm talking, right? That's maybe just, it applies when your total mile is 0 mile to 10,000 mile for that month. If you say here, I'm using this month, drive all the way from here to China, drive all the way from here to Mexico or whatever, if you run out of that relevant range, then the insurance will go up. Even it's called so-called fixed cost. It will not be fixed if it goes beyond that range. So when we talk about the fixed cost, it's just a relevant term. It's fixed in certain range. If you run out of this range, then it will not be fixed. It can either go up or maybe it can go down. So that's just the idea. It doesn't mean, hey, no matter how miles you drive, it will be $50. It's just in certain range. Okay, I stop here. I think we just get some idea from the chapter 2, and then from your high school of the regression model. We will talk about more details and calculation in the next part. I see you in next video. Let me know if you have any question. Thank you.